Okay, time arbitrage. Let's talk about a really useful concept for individual investors. And first, let me define what it is. Basically, you want to think about time horizons for different investors. And some investors are very, very short term in their thinking. Other investors are very, very long term in their thinking. And in general, institutions tend to be shorter term in their time horizons than they really should be. So this is a benefit or an opportunity potentially for individual investors who can stretch out their time horizon and think very long term. So a good example we saw this calendar year happened with the COVID crisis. And as a result of COVID, there was a lot of concern about the economy. There was a lot of concern about the banking sector. And the European Central Bank basically told banks in the Eurozone to suspend dividend payments for the calendar year. Or for at least the foreseeable future. At the time, we didn't really know how long this would be, but I think an investor that looked at that and was sort of in panic mode might sell any of their European banks, and of course those banks traded down on this news. And you could sort of understand why. You think you have a dividend-paying stock, all of a sudden it's not going to pay any dividends to you. Maybe you're going to sell that asset and try to buy something else that might pay you in the interim. Okay, I get that. But if you have a longer term time horizon, you would be buying these banks because you know that over the next year or so, COVID is going to pass or some sort of resolution to the crisis is going to happen. And these banks at some point will reinstate their dividends. And it turned out that's exactly how it worked. Late in 2020, this current calendar year, in the last month or two, European banks got permission to restart their dividends in 2021. And so the bank stocks started trading higher, and next year probably we're going to be starting to get our dividends again from these stocks. So all you had to do was think a little bit more long term, and not even that long term, but longer term than everybody else, and you were able to stumble onto an opportunity when everyone else was running away from it. So this is just sort of a concept where if you can find a time horizon that differs from the collective or from the consensus, and you can make an investment based on an arbitrage of those time horizons, that's opportunity. So keep that in mind. And again, it's just a tool that you can use as an investor. And I hope these videos are helpful. And as always, thanks for watching.